makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Higher for longer while the Fed holds rates steady for a sixth time in a row. The Fed Chair Jay Powell keeps cuts on the table, but the timing is less certain.
I do think it's clear that that policy is restrictive. I think it's unlikely that the next policy rate move will be a hike.
Well, Novo Nordisk quadruples U.S. shipments of its blockbuster weight loss drug Wegovy as it raises its profit and sales outlook. We'll also speak to the chief financial officer of Europe's most valuable company in a few minutes. Plus, oil giant Shell maintains the pace of buybacks as profit beats estimates. We'll have a deeper dive in our weekly Bloomberg UK show at 9:30 a.m. But first thing is first, let's take a look at some of the European market movements. Now, stocks definitely trading a little bit mixed. Treasury yields ticking lower after we heard from Jay Powell really downplaying the prospects of further interest rate hikes. Now, the yen does seem to be resuming some of the losses. A lot of the focus is not only on cross assets, but some of the earnings, which is why we're seeing this discrepancy in some of the sectors. So this is your cross asset check. You can see yen 155.46, one of the main things that we've definitely been keeping an eye on this week. And then there's a little bit of further insight into the health of the U.S. economy. Of course, that will come from April non-farm payrolls, also due tomorrow. For the moment, you can see the U.S. two-year yield 4.9393 and then gold 2,309. So the Fed Chair, Jay Powell, keeping hopes alive for a rate cut this year, but he also says that a burst of inflation has reduced confidence that price pressures are ebbing. Well, let's get more from Paul Dobson, our executive editor for Asia Markets. Paul, I know there's a lot going on, so congratulations, first of all, to you and your team for really some fantastic coverage. Is a lot of the focus on earnings, or is it really more on what inflation, what the Fed path ahead is?
Yeah, hi there, Francine. Well, I think that the earnings picture seems to be a little bit more on the micro side rather than the macro side at the moment. We've seen individual companies have some pretty terrific results and performances, but we've also seen a lot of companies getting punished if they've fallen short of analysts' lofty expectations. So there's some lessons for us there. But overall, the sentiment seems to be holding up fairly well. And of course, you know, the backdrop is the Fed is still giving us the signal that it's more minded to be cutting rates at some point in the future than it is to be hiking rates anytime soon. And so long as that supportive backdrop is there, it feels like the equities market can continue to take some kind of solace and support from that backdrop. So even if we're not going to get any rate cuts, you know, until towards the end of the year, actually, the economy seems like it's holding up pretty well anyway. Earnings steady as she goes, maybe. Some good numbers out there. But yeah, reasons not to be too bearish on the market, at least at the moment.
So, Paul, what did you make of what we heard from Jay Powell yesterday? Again, you know, he talked about cuts, but actually wouldn't give a time frame. What does that mean for markets?
Yeah, so I think that there was a few telling things from the Fed there, and we saw in the market reaction, stocks only got a very short lift, and that didn't last very long. People were back to focusing on the bigger background, because basically if the Fed is data dependent, then you want to see the data. You don't necessarily want to listen to what the policymakers are saying. I did think that it was interesting, a couple of things that he said. First of all, he's very much against the idea that there's a stagflationary background. He said, I see neither the stag nor the inflation. So he's not terribly worried about the inflationary forces there. He's definitely not that worried about any signs of a slowing economy either. That said, you know, kind of the Fed would like to cut, but it knows that it's not going to be able to get there. On the fixed income side, I thought things were a little bit more interesting. We did see yields end the day lower, you know, taking a little bit of support from the Fed, but also from the fact that it's tapering off its quantitative tightening a little bit more than people had expected. And also in the issuance update, we see that auction sizes are remaining the same for the next quarter. So on the supply-demand balance, at least, Treasury is looking a little bit more, in favor after the sort of triple whammy of news that we had in the US yesterday.
Wonderful. Thank you so much, Paul, for a terrific, as always, briefing, of course, on what's happening in global markets. Now, Europe's most valuable company has raised its profit outlook. Well, Novo Nordisk says it's now shipping 5 times more introductory doses of its weight loss drug Wegovy in the U.S. than at the end of last year. The Danish pharmaceutical giant has also announced further investment in production as it struggles to meet demand. Well, I'm very pleased to be joined now by the Novo Nordisk Chief Financial Officer, Karsten Munk Knudsen. We also welcome listeners on Bloomberg Radio. So, Mr. Knudsen, thank you for joining us. There's a lot going on, and a lot of appetite, of course, from investors to try and understand what Novo does next on supply and, of course, on pricing. What can you tell us about supply? We understand that you have welcomed, of course, more new doses to the U.S. Can you talk us about those figures, how many new patients, and how much that will change in the future?
Yeah, and good morning, and it's a pleasure to be here today with a solid set of Q1 results and a raised outlook. So as to Wegovy and the Wegovy launch and how that progresses, then the short story is that it's all on track compared to our plans. We have been raising our starter doses in the U.S. from around 5,000 when we entered this year to more than 25,000 as of the latest weekly data point. So more than 5 times up compared to the start of the year, which then in turn translates into total number of scripts, which are now exceeding 130,000 scripts per week. So we see a steady ramp, and our approach is really to scale that over time as more manufacturing capacity becomes available.
So, Mr. Knudsen, can you again give us an idea of this gradual ramp up going forward? Will the figures be kind of similar, and how does that feed into your guidance?
Yeah, so it's baked into our guidance, and we stepped up first step in late January in terms of the starter doses, and then we again increased the amount of starter doses here in April, and that's what you see translating into new to brand script starts, and then as we scale manufacturing, then we will be scaling starter doses gradually. We're not out guiding specifically on how much and when, apart from what you can see implicitly in our full year guidance range between 19 and 27% sales growth.
So some analysts are saying that price pressure in the last quarter was actually probably more intense than they were expecting. Do you expect that to continue going forward? And is this just because of the nature of the drug?
Well, I wouldn't say that price pressure is more intense than what we expected. We've actually been out for quite a while saying that as the market matures and volumes ramp up and competition enters the market, then it's natural that prices will be coming down, and that's what we've seen in the first quarter and also what we expect for the full year. So no surprises on that front. And there I'll say again, this is not a price optimization type strategy. This is really a strategy about building a market which has very, very sizable potential. So as of today, we're only serving a little bit more than 1 million people with obesity in a global population of people with obesity of more than 800 million. So it's a volume strategy with a significant runway.
Is it fair to say that weight loss drugs maybe face more intense price competition than other types of medicine?
No, I wouldn't say that. So competition is, of course, a function around the number of players in the specific marketplace, first of all, and then I would say secondly, pricing is also a function when we discuss with payers around the benefits, the value that a product brings to the market, and we're having very productive engagements with payers in the U.S. So right now we have more than 50 million people with obesity in the U.S. covered with Wegovy. So in reality of our Wegovy business, 80% of our Wegovy business, that's with the patients who are paying less than $25 per script.
So given the cash that you're generating, of course, from this uptake in GLP-1, can you give me a sense of how much you're reinvesting? How do you look at capital allocation, like margins versus reinvestment?
Yeah, so we have a disciplined approach to our capital allocation, and of course it's a favorable position to be in with rapid growth and solid cash generation. And our starting point is really that to invest in our business organically. We've done that for more than 100 years now, to build the business that makes a difference to society and reach as many patients as possible within the therapeutic categories we're operating in. So step one is invest in our business, building obesity, building supply chain, and expand our R&D pipeline organically. Then, of course, we like to return capital to our investors in form of dividends, so a 50% payout ratio. Then we also pursue external business development activities to scale up our pipeline. And then finally, we do share buybacks with the excess capital when we're done with the first three.
How much firepower do you have now for acquisitions? Is there anything that looks attractive as you really look to solidify your position, but also make sure you have best-in-class next-generation drugs?
Well, so when you look at our balance sheet and pre-Catalent, we have zero leverage if you look at a net debt EBITDA type measure, and for an industry, then you could go to call it 2 or 2.5 easily. And Catalent only takes us, it's still south of 1. So we have significant bandwidth in terms of M&A. But here the important point is that's not our M&A or business development strategy. Our strategy is really to what you would call a string of pearls type strategy. So to go for preferably early phase R&D assets, so preclinical or phase 1, perhaps even phase 2, and there it's not really a capital issue on our side.
Sir, Novo has such an amazing story, and you've ramped up supply. You're giving more doses, especially in the U.S. Your share price is down 2%. Is that a worry for you? Do you look at the share price?
Of course, I always look at the share price, but it's important to note that we run the company for long-term value creation, and so we're not managing the company for the quarter. There's a good disciplining effect of being a listed company and have to be accountable for our results each and every quarter. But ultimately, we're focused on creating value for the long term, and in that context, we raised our guidance for the full year. So on that front, we're fully on track with our plans.
Thank you so much for your time today. I know it's a very busy day for you and the team there in Denmark. Karsten Munk Knudsen, the Chief Financial Officer and Executive Vice President of Novo Nordisk. Now, we'll also be talking to Novo Nordisk's Chief Executive and President, Lars Fruergaard Jørgensen. That's at 3:30 p.m. UK time. That's 10:30 a.m. Eastern time. Now, coming up, Bloomberg has learned that the U.S. and Saudi Arabia are nearing a deal which could reshape Middle Eastern politics. More details on that next. And this is Bloomberg. Well, Bloomberg has learned that the U.S. and Saudi Arabia are nearing a historic deal that could potentially reshape security in the Middle East. Let's get the details now with Roz Matheson, our EMEA news director. Roz, so they're nearing a defense deal. We're also hearing movements in Saudi Arabia. Is that a good thing for peace in the Middle East?
Well, this was a deal that's been in the works for a very long time. And, of course, it was put on ice when we had the outbreak of war in Gaza. And it's a much toned-down deal than we're initially talking about. It still would mean that Saudi Arabia would get access to much higher-level defence equipment from the US. It would help push out China in that enterprise also with Saudi Arabia. And the idea is they agree on a deal, and then they go to Israel and say, we'd like you to be part of this deal also because you'll get diplomatic status with Saudi Arabia, but you have to stop the war in Gaza, and also we need to talk about Palestinian statehood, and that's obviously a non-starter. It's also complicated enough that it could strike trouble in the US Senate, so there's no guarantee this deal will even get through, but at least it's a signal that Saudi Arabia and the US are talking, and they want those closer ties, and they want to use those closer ties as leverage to bring Israel further into the tent.
Roz, what can you update us on actually protests and campuses across the U.S., but also in European countries?
Well, that's right. We are seeing protests not just in the US, but around the world, in much smaller cases, of course, in the UK and Europe as well. But as is the case with these things, they often start with students, with younger people on campuses, and that's what we've been seeing, particularly in the US. We do know the protests have continued. There wasn't the outbreak of violence that we saw again last night. We haven't seen police moving in wholesale to campuses again, but they're not going away. They haven't disappeared. And certainly there's that pressure coming from younger people in the US. And that's really important when we look ahead to the US election, for example, because Joe Biden, he needs not just the Jewish vote, but there's also a significant Arab vote in the US to think about. And obviously it's very much percolating in the psyche of younger people, and those are voters that he really needs to count on come November.
Roz, thank you so much. Roz Matheson, there, our Bloomberg EMEA News Director, of course, on many uncertainties across the world. Now let's take a closer look at the markets with Ozan Tarman. He's Vice Chair of Global Macro at Deutsche Bank. Ozan, I mean, when you look at uncertainty around the world, it's really playing out in the markets. We have a lot of earnings, there's geopolitics, a lot to get through. What's driving markets? Monetary policy on the Fed or earnings?
Thanks so much for the invite. Day after Fed, before NFP, Champions League final. Thanks so much. Wonderful time to be on the pulse. Look, obviously, Fed and rates and inflation path is a big factor, especially for the short term. Going into yesterday, we were a bit too hawked, too bared up. We were too into whether he would say the hike word or not. And also, what he did on the QT front was very important. At the end of the day, that is, in quotation marks, easing. Even my dream team, Matt Luzetti and Brett Ryan, were expecting to hold until June, maybe. Most people were expecting lowering to 30 billion. He went to 25 billion. On top, he answered the hike question pretty clearly. And then I love the highlight he gave, no stack or no inflation. Let's see where we are on that come June. But for now, that gave a bit more life to the pain trades, which are stronger equities, softer dollar, lower rates.
But Ozan, actually, I mean, what you say on QT is really crucial. Does it also give us an indication of what he could do on rates? I mean, is it one and the other? One can help the other because actually interest rates are a much blunder, way of dealing with it.
I think he did want to go in June, but then he had to respect the data as well. So up until March, it was an okay story, despite the seasonal effects, etc. Owner's equivalent rent, just like Powell, I have my reservations, but it is what we have. The last CPI print is 0.359. If that came 0.34, rounding it down to 0.3, you would have a different world. But now market is forcing his hand. Yeah. So we went from 7 to 6 cuts. Last time I was here, we were almost laughing about it. I never believed that. But for my taste, a bit too quickly to this December and one and done consensus. My gut feel still says he will turn out to be right about shelter inflation, car insurance being backward looking. He will get some good news in the next few months, and he may be able to get away with one cut in September, actually, before the elections.
Ozan, how much time are you spending trying to figure out what happens with yen, the BOJ, and whether, frankly, Japanese authorities can even stem this decline?
A lot. I was expected to come here to talk about Powell, and then one more highlight, right? Possible intervention last night. Again, it's very in vogue for some traders, especially those who are long dollar yen, to find it futile. But I like what they're doing. Right after so-called dovish Fed, actually some of my clients were mumbling around 7:50 p.m. our time. What if Bank of Japan comes, Ministry of Finance comes now? Well, they did. So at least it's keeping it two-way. It's giving more uncertainty. Now, whether it becomes effective or not, everybody is going to Japan, right? You were there, wonderful photos from Tokyo. What is not to like? Higher stocks, higher banks, inflation, give or take 2%. So I think Ueda-san is thinking that if he lets the yen go a little bit, that's a better trade-off than hiking rates too aggressively. So I don't think we will get that yen strength. But that being said, I do agree with our team, Koyama-san. We will see 2 more hikes, we predict, in July and December. Enough to stem the tide? No, but for the moment, it will keep dollar yen two-way. And more two-way dollar yen also helps the pain trades at the moment.
Okay, what's your favorite trade right now in 20 seconds?
In short term, I would still go with anti-risk parity. They have the momentum. Give me a high NFP like people expect or high wages tomorrow. we will go steeper rates, stronger dollar, lower equities. But medium term, I think risk parity will win. One more thing, Deutsche Bank, one more advertisement from Team Yared and Sokos. European rates may surprise. They may end up selling off even more than US. There may be a tightener. Europe, thanks to your Italy, Spain,
we need
may
to
surprise
talk
on the
about
upside.
that. Ozan, and then we haven't even talked football. There you go. Ozan Tarman, really too short a time, Vice Chair of Global Macro at Deutsche Bank. Much more to come. This is Bloomberg. Let's return to Ozan Tarman from Deutsche Bank. Ozan, the markets aren't really focused on the U.S. election right now. Are they wrong?
No, they're not, because I think it's the whole thing is closer than they think. Most market players, at least a month ago, expected Trump to win by like 70%, 80% odds. I think it's much closer. Depends on 3 swing states, Michigan, Pennsylvania, Wisconsin. Very different outcomes, Francine, on what happens. If we get Trump back, on paper, stronger dollar, tariffs, steeper curves, more spending, and higher equities, deregulation, and then maybe question your trust moment a bit more because more fiscal looseness, central bank question marks. If Biden defends, I think that means softer dollar, again good news for equities, and probably lower, softer rates with Brainard Yellen in charge.
Interesting. Ozan, thank you so much. Ozan Tarman from Deutsche Bank. Up next, we focus on the UK. This is Bloomberg.